Hello and welcome everyone. My name is Elena Parfenova and I will be technical moderator for today's webinar titled Supply Chain 2021, Navigating the Changing Landscape. Thank you very much for joining. Before I introduce the moderator, there are a few housekeeping points I'd like to cover. At the bottom of the webinar screen, you should see a toolbar. Use the toolbar to access a range of applications such as speaker's biography, webinar materials, technical support, and also if you would like to request a free trial demo. Click on an application and it should open on your screen. All applications are resizable and movable, so feel free to move them around to get the best of your screen space. Please submit your questions throughout the webinar via the question and answer section, and the speakers and moderator will answer them during the webinar. For the best viewing experience, we highly recommend you closing all programs or browser sessions running on the background. The webcast is being streamed. So, for the best audio quality, please make sure your computer speakers or headset volume is turned up. Some networks cause slides to advance more slowly than others, so don't worry about that stuff. The recording of the webinar will be sent to all registered during 1 week after the event. And also, if you would like to request a free trial for WorldCheck, please click the button on the screen. We value your feedback very much, so please do complete the pop-up survey after the webinar. So, without further ado, let me introduce Che Sidanius, Global Head of Financial Crime Regulation and Industry Affairs, Refinitiv LSEG Business. Che, over to you, please. You are on mute, I guess.
It has to happen at least once a week that we do this. But as I was trying to say, very warm welcome. Thank you, Elena, for the introductions. We're delighted to be joined by some incredible speakers on a really important topic that we'll get into in more detail. But let me set the scene before I introduce our speakers. So as you've seen, the topic of today is supply chain in 2021, navigating the changing landscape. We're all reminded, of course, on the impact of COVID-19 has had on the corporate supply chain, and of course, Wuhan, China, as a major manufacturing base, and the impact that's had not only for manufacturing companies but corporates globally. We're also, of course, reminded of the impact of the blockage at the Suez Canal, which facilitates about 12% of global trade, and because of that blockage, it's estimated around $10 billion of goods and services wasn't able to conduct its business. And so clearly the need for supply chain risk management and the focus on supply chain risk management I think it's become more prevalent and more pertinent than in a long time. This sits, of course, in the context of change in legislative efforts as well. We're all seeing in the European Commission and the European Union how they've focused on supply chain due diligence on topics like human rights and labor rights. We've also seen those types of efforts in the US and many other parts of the world as well. So we'll get into these issues. We'll get into the issues of some of the policy changes that are happening, some of the impact, the practical impact that's happening in terms of how to manage supply chain, and we'll hear from our speakers on all these points. If I can move to the next slide and introduce our speakers. Next slide. There we go. So first, delighted to welcome Jesse Glickstein, who focuses on environmental human rights at Hewlett Packard, of course, a global firm with a global presence, and who've spent a lot of time and effort in trying to manage these issues. And so he'll talk about some of the efforts that HP are doing. We're also joined by Ben Katz, delighted that he could join from the OECD, who've put a lot of focus and policy attention on supply chain risk management and due diligence efforts. So he'll talk about some of the efforts that the OECD is focusing on. And then we're also joined by Ivan Mikheev, Vice President Supply Chain of Electroshield, Samara. And he'll also talk about some of the practical implications of this in terms of how it impacts the price of our products, how it makes the world more complicated to manage, and some of the issues that he's seeing. So without further ado, let me first invite each speaker to have a few minutes of opening remarks. I will start with Ben. So from a policy perspective, from the OECD's perspective, if you can discuss a little bit about why is supply chain risk a focus for the OECD? What do you see are the key sort of policy priorities in 2021 and beyond? And if you give us a little bit of that flavor, and then we'll turn it over to the other speakers. But Ben, please, over to you for your opening remarks.
Thanks, Che, and thanks for including us in this conversation. Indeed, at the OECD and particularly in the Center for Responsible Business Conduct, where I work here, supply chains are really critical for us. They've been important before the pandemic, and they'll continue to be. That's partly because based on the risks that we consider RBC, Responsible Business Conduct, should address, and also the way that companies can address these risks that are external to the company, that affect people, planet, and society, that these risks, the only way to address them is precisely through supply chain due diligence. So these impacts can occur through business relationships, not only a company's own operations. And of course, I think through the pandemic and in terms of the changing landscape, policy-wise, and in terms of businesses' operations and the configurations of supply chains, we're seeing a lot of interest in, how can we make supply chains more resilient? And I think part of that question governments are trying to address through industrial policy or otherwise regulating what are considered critical materials. But the other side of that is ensuring that those RBC risks, whether it's related to corruption or serious human rights abuses or conflict financing, that those risks that can be exacerbated by the kinds of disruptions we saw the last year are being addressed in practice by companies. And I think in a lot of ways we're seeing through the pandemic, maybe it's been brought more into relief by the pandemic, the fact that these are actually complementary and there's synergies between companies ensuring that they're resilient operationally and heading off risks, internal risks to the company, and also looking at these external risks. And that's because there's obviously the importance of reputational risks to the companies that link these two together, but also simply having visibility over supply chains and ensuring that there's operational redundancy built into them, and supply chain due diligence can really help with that.
Terrific. Thank you for that. And we'll return to some of those issues when we get to the Q&A section. I encourage everyone to send your questions as well. So once we've concluded the opening remarks for each of our speakers, that we'd like to keep it as conversational as possible. So please do send your questions, and we'll make sure to try to address them as we go ahead. So thanks very much for that. So if I can turn to you, Jesse, from a Hewlett Packard's perspective, how do you guys get your arm around how to manage your own supply chain risks? How has that evolved? And what do you see as potentially good practices or some of the challenges that you guys are dealing with at the moment?
Yeah, thanks very much. I also want to thank you, Che, for the invitation, and it's great to be on this panel. Actually, I want to just quickly pick up on what Ben said, because I think a big part of that is having the infrastructure, the framework within a company to deal with these issues. And so for HPE, we use the OECD guidelines for multinational enterprises that, informs our work, which especially the due diligence guidance on responsible business conduct. One thing I want to just inform, participants of is kind of where I'm coming from here, right? I'm environmental and human rights counsel for a Fortune 500 company with a good amount of resources that's built a program that has been recognized. We just won the Stop Slavery Award for the second time in 5 years. We're ranked really highly on benchmarks like CHRB and Know the Chain, ranked the most ethical company. But that came with a lot of work and a lot of infrastructure, and it's still really, really hard. Like even with those resources, it's still really difficult. So I do think a big part of it is the culture, and I also want to recognize that like how an SME versus a large enterprise or a publicly listed versus a private company is going to go about this. Obviously, is going to it's going to impact the program. But I think key to this is having strong policies around these various issues. So whether it's human rights, sustainability, conflict minerals, global trade, obviously, all of these are now intersecting. And I think, so for HPE, right, originally in the founding, when it was HP, the founders had a commitment to responsibility. This was almost 100 years ago. It's a commitment to community responsibility. So when the split happened between HP and HPE in about 2015, that culture transferred to HPE, right? And so this idea of integrity and ethics is kind of central to our program. But we continue to build out really strong policies around global human rights. We have a very strong supplier code of conduct that is based upon the Responsible Business Alliance, their code of conduct. So again, leveraging partnerships through associations with other businesses in the same industry to try to come up with a code of conduct for our suppliers. And this is, of course, evolving. I think, as Che mentioned early on, I mean, the idea of ESG, environmental social governance, is, I would tell all participants, maybe set a Google alert for ESG disclosure for due diligence, and you will have a full email every day. This is from the Hong Kong Stock Exchange to the UK to the US, and especially throughout the EU. This issue of what companies need to disclose has really moved from voluntary, right, and kind of more focused on investments probably a decade ago or 15 years ago, moving towards mandatory, while, in between, we've had to really think about in our supply chain, how are we going to hold suppliers accountable so that we can effectively be compliant with the various regulations. Now, at the moment, most of the regulations, and again, HPE takes them very seriously, and we try to be forward-thinking. There's not huge penalties for non-compliance, right? So now there is a lot of thought around, especially in the EU, with mandatory due diligence. There's discussions of should there be penalties or not? How are we going to hold companies accountable? And I'm not advocating for that. What I'm saying is we're preparing for whatever the eventual regulation is. But you can only do that if you have policies in place. And I think a big part of that is buy-in at the top. And again, that goes to the culture. So our ethics and compliance department, while we all recognize there are business considerations. And so our role is to bring the ethical, the SER, ESG perspective, right, to the conversation and make sure that everybody in the room understands this could be the impact, right? This is where we're at in terms of human rights, environmental, conflict minerals. This is our obligation. This is what we need to do. How do we get there? And getting buy-in around it. I'm going to say is around the reputational risk. This is no longer going to be voluntary. So these discussions are shifting dramatically from should we be leaders on this issue? Should we speak up on this issue too? Do we have to speak up? And even if it's not legally required, the media and NGOs, this is a very big issue. So again, I urge folks to set Google alerts for various emerging issues, and your email will be full every day of issues that could put your company on the front page of a newspaper. And that is equally from a business perspective important to think about, because if you're on the front page of a newspaper for the wrong reasons, whether or not the allegations are true, unless you can point to a very strong program and say, look, we've done our due diligence, we have visibility on this, and we're working hard to understand it, then you're going to be in a very tough situation in terms of explaining it. And so I think this is kind of the intersection of a lot of different parts of most folks' businesses, whether you're an SME or a large enterprise, because it now intersects with a lot of the geopolitical issues that are going on, emerging regulations, and then just supply chain and actually value chain issues, because the EU due diligence is actually potentially going to focus on the full value chain, including customers. So thanks very much.
That's terrific, Jesse, and a lot there for us to unpack, and we will. Lots of things about voluntary versus mandatory, some of the policy direction, certainly in the EU, the intersection with ESG and sustainability, and the accountability piece. So we'll return to those in a few moments. But before we do that, Ivan, if I could turn to you and to have your opening remarks in terms of how Electroshield views supply chain risk, what some of the complications are, and potential some of the trends that you guys are seeing, and is making it either easier or more difficult for your company to manage that type of risk.
Yes, thank you, Che. In addition, what the previous guy said, thank you for Benjamin testing. I would like to add from my perspective, due that I'm really fully engaged for operational cycle of the supply chain, due that I'm responsible for supply chain in Electroshield Samara, subsidiary of Schneider Electric, and the second owner of our company is Russian Fund of Direct Investment, RFE, if we name it in Russian language. What I would like to add that, of course, we have a lot of challenges for this year, which starting the previous year, 2020. It's not only COVID, I would like to say. We have really problems with human resources, with some difficulties in raw materials market. It's really impacting all the industrial sector. I would like to say that it is normally all kind of materials, can be metals, can be plastic, and different. We have also the challenges like shortages in supply, in delivery, in production, not only by and it is connected with a sustainable business. It is connected with sustainable supply chain. As I already mentioned, people is very important, because we focus with situation where the people has the difficulties with disease. I'm talking about COVID, of course, and some shortages, some blockages of the countries as well. On the market, which is really important for our industry, I also focus with situation of quotation for some commodities which we need to buy on the market. For example, it's metal. It's for me is this balance between demand and what the market can offered. And it's all kind of turbulence with forex exchange rates of the currencies, LME indexes, and whatever. It's impacting the business a lot. And if we're talking about sustainability and possibility to find opportunity to find the savings, because my function is exactly responsible for procurement, for logistics, and for planning, supply development, I can see all the kind of factors which is impacting all the industries.
That's terrific. Thank you so much for that. So some of the key takeaways, and we'll return to that again and get some additional comments around the shortages, the difficulty in pricing the inputs versus your outputs, right? So you have manufacturing as inputs, and then you produce as outputs, and because of the increased volatility of those inputs, then it becomes more difficult to manage, of course. And we can talk about some of the market fluctuations as well, like FX as well. But before we open it up to Q&A, and again, I encourage all the attendees to submit your questions. We'll review those, and we'll make sure to address as many as we can. But before we open it up for Q&A, I'll just be curious to see to what degree that supply chain risk and third-party risk is something that's being actively monitored in your assessment, in your organization. So if I could ask our team to put up the first polling question, which is about, are you monitoring third parties and ongoing risks? And again, this is all about supply chain risk management, in terms of, depending on your role as a supplier, manufacturer, distributor. So it's a binary question. Do you monitor third-party risks on an ongoing basis? Yes or no? We'll give it a moment, and maybe pending that result, we can reflect on the answer. I will certainly share with you, after we've received some of the results, some of the analysis that we have done at Refinitiv that asks that very, very question, which touches on some of the things that our presenters have addressed as well. So, okay, that's quite good. So 100%, everyone is monitoring their third-party risks. That's actually a higher figure than the survey that we conducted last year, where actually a majority did not, in fact, monitor their third-party suppliers. But we may have a biased audience here, but that's a very good result, in fact. And I guess from your perspective, from OECD's perspective, Ben, does that result surprise you? Is that something that you would have anticipated? And we heard mention of HP's reliance on OECD's kind of due diligence framework, which is great to hear. But does that surprise you in terms of that result, that everyone's actually monitoring supply chain risk?
I don't think it surprises me that there's some monitoring. We've been doing some research as well on global uptake of the due diligence guidance, particularly the minerals guidance. And overall, what we find are quite middling results. But if you think about it from the point of view of, well, companies at least demonstrating at least one dimension of uptake, it's quite high. So I think the question is kind of drilling down and looking under the hood in terms of the quality of due diligence. And I think where we're seeing particular gaps, maybe on the specificity of risk identification, responding to risks, and tracking results of mitigation action. So I mean, it's becoming quite common, and it's certainly encouraging that we see widespread adoption of policies and companies reporting on those policies and making commitments to supply chain due diligence. But we don't really see that completely reflected, at least to the level of detail that OECD instruments call on companies to disclose. We don't really see that reflected in their reporting. So that's an area of ongoing concern. And, I think in some ways, it's certainly kind of a glass half full perspective. I think we're seeing this emergence of a global rules-based system for supply chain due diligence that's modeled on the OECD instruments, and that's certainly encouraging. And we see other levers out there, like at the exchange, commodity exchange level, or through legislation, or simply market expectations. And that's that's a great foundation. But in terms of individual action, we see some gaps there in terms of the quality.
That's great. And maybe if I can turn the same question to you, Jesse, and then we'll turn to a different question for Ivan. Does that surprise you in terms of what widespread adoption of monitoring of supply chain risk, or based on your experience to the point that Ben made, there's a difference between saying that you're doing so, and you may have policy procedures that says that you do so, but when you actually get into the details of what does that actually mean, and what metrics do you actually capture, what's your kind of view on where of industry practice, and also how HP yourself have evolved on this question?
Sure. Yeah, I mean, I think that this idea of program versus disclosure, for sure, it's not surprising that there's some tracking. I would also say that the emergence over the past 5 years of an entire industry around supply chain data and analytics and things like that. Starting kind of with sustainability reporting, right? Like, I think that's really, if you think about the origins and where it's gone, right now we're in a place where many companies have some sort of sustainability report. Certain companies have more data behind that report, but the idea of disclosing kind of at a high level how you deal with sustainability has been widely adopted. So I do think more and more companies now, this is on the radar because, again, it's being more regulated. So if you look at let's say the area of modern slavery or even emissions, not only there are various disclosure obligations at this moment, though most of those are at a fairly high level, and there's a lot of leeway in how a company addresses that. HPE chooses to address those issues fairly aggressively because, again, leadership values being kind of leaders on this issue, and it's kind of core to the tenets of our company and how we do business. But I also think one thing that should be talked about is it's not only from the regulators, it's also from our own customers, right? So HPE has to respond constantly. I mean, that's at least 30% of what I do is to customer requests, many of whom are large companies, some of whom are smaller. And some of those requests are not based in regulations. I mean, a good example of that of emerging issues are rare earth minerals, right? That's an area kind of emerging, and I'm sure Ben can speak more to that. But when we get requests around that, we have to be able to be accountable to our customers. And that's important because they have their own standards and they're thinking about this issue maybe in a different way than regulators are. And so that's another complicated issue that we have to think about.
That's great. Thanks for that. And Ivan, if I can turn to you either to reflect on the point that Jesse and Ben just made, but also to pick up on the point that you made, that it's becoming more difficult, particularly in the regions and the jurisdictions that you operate in and that your company operates in, it's becoming more difficult to manage production. It's becoming more difficult to manage the volatility, I guess, of some of the supplies that you need. So if you can speak to that, what's the driving factor or factors that's making it more difficult to manage supply chain risk from your company's perspective?
Yes, we should speak here about geopolitical risk, of course, because it is impacting this area a lot. We, all of us know, and you, Che, starting from that we have, for example, this kind of channel problem, yeah. Also, what we focus with 2020, it is difficulties with the China flow, China deliveries, and that is really a problem due to this kind of container war, which was in the end of the year. The winter this year was also difficult. As far as I know, for the United States, it's impacting as well. Some factories is located in Texas still not working correctly for production of raw material. And all these kind of it's real facts, which is impacting a lot of the industrial sector. And I think it is really the challenge for the future of supply chain. That we care about sustainability and reliability of supply chain flows.
And has that impacted or affected the types of metrics that you use or that you capture to manage that risk in a different way versus maybe what you've done historically, number one? And number two, to Jesse's point, do you see any pressures, whether they're from regulators, the policy side, or in fact, your clients, your customers, or other companies that you deal with, to get more metrics and to respond to potentially more changing market expectations, I guess, and political expectations. So are you changing the way you measure these issues and the way that you capture metrics to manage this?
Of course, for example, if we're talking about logistics, the trend 2021, it will be to be more flexible, more agile, more elastic, and this is really opportunity for supply chain to adapt. I would like to say like that, for the circumstances which really we focus in. And of course, if we're talking about the metric, we should manage the companies and think about due diligence of some areas of the suppliers and their supply as well, which is impacting to all the industry. And from the production point of view, we have such metrics inside of our organization, and we measure not only possibilities of supplier to deliver on time or maybe some quality issues, but we also should focus on the reliability of the company from such conditions. Yeah? And it is important for tax view, it is important for I would like to say the rumors between the companies and what is going on in the market. We should be pay attention what is going on there, and to be really put the pulse of the what is going on. Yeah.
So this is a great point, and let's pick up on this issue of looking at due diligence and supply chain risks simply to kind of to manage the risks of it, versus it could potentially be an opportunity to look at a more reliable supply chain, which may have commercial benefits, the brand of your company, etc. So maybe if we can turn to that question regarding whether in fact supply chain due diligence, if I ask the team to put that polling question up, which is the third one, I believe, whether supply chain due diligence in fact has a positive commercial impact, and whether it's in fact strengthened the resilience of the business model itself. So if I can ask the team to put that question up, and maybe we can we'll have a moment for for the attendees to vote on that. Can we get that question up, please? There we go. Nope. It's the question about has supply chain due diligence had a positive commercial impact for your business and whether it's strengthened. There we go. There we go. Again, binary question. So this is moving beyond just, you know, managing the risk of enforcement or some kind of supervisory action, but in fact that, you know, managing due diligence and the resiliency of supply chain is actually a good thing. It has a positive commercial impact, whether it comes to a more stable revenue stream, a more stable supplier base, etc. So we'll give it a moment to see whether people agree with this statement, and then we'll reflect on that. And then I'll probably, well, that's interesting. It's split right down the middle. And clearly, let me turn to you, Jesse. You know, clearly HP has a view on this, that it's not just, you know, it's not just good for ethics and an ethical culture, but it's also good for business, I would assume as well. So if you can reflect on the results here and maybe reflect on the reason why HP decided to put such an emphasis on good, you know, due diligence practices.
Sure. So, you know, first I think that you know, the pandemic is a perfect example of, you know, if you have a framework or you don't have a framework and you have strong management policies and accountability that your suppliers are well aware of, and that there's a program behind that. When something like the pandemic hits, HPE felt we were in a fairly good position to uphold our standards. And I think we were able to, you know, we have a whole webpage on that, on how we've done that, and continue to uphold all of our standards and how we've worked with suppliers as, again, we recognize in this policy or in this statement that, you know, the pandemic posed some significant challenges. And so a lot of companies were just struggling to survive. Well, at the same time, we still needed to make clear that we have expectations around our compliance obligations. And so I think, you know, your comment about risk, I think is critical. Actually, HPE's approach to supply chain responsibility is a risk-based approach. And that means that, one, we have very strong grievance mechanisms. So when there's something going on, do folks within the supply chain have mechanisms to report it to us so we are aware of it and then we can address the issue. We have very strong stakeholder engagement. And we have very strong remediation policies, so it's very clear to our suppliers how we're going to remediate. We don't adhere to the concept of you know, and this is, again, if there's a media inquiry and you don't have a strong policy, it's harder to respond, but we don't cut and run. We adhere to, you know, the internationally recognized standard of, you know, the idea of working with suppliers, because if you cut and run oftenly, that can lead to greater abuses, right? And so we believe in lifting our suppliers up. And obviously at some point that ends if there's not a responsiveness. But if you go and you look at HPE's supply chain responsibility approach, which again is online, I think that puts us in a position to not have to just, you know, if there's a report about a supplier, suddenly, you know, we lose our supply chain, right? Like we're in a position where we have a strong supply chain, our expectations are very clear, and whether there's a crisis or not, we're consistently working with our suppliers and in our supply chain to make sure that our standards are being upheld, including through an auditing process. I think that puts, and then the last thing I'll say in terms of it being, you know, good for business is executives go out and talk about this stuff. So even though they were talking about it at a time where maybe it wasn't the front page of the news, now that ESG and due diligence is everywhere, you know, folks want to know what HPE's position is. And I think, again, that is evidenced by the fact that now we have I've talked a lot about human rights and conflict minerals, but also in the area of climate change and emissions. The Wall Street Journal did a full-page story on HPE disclosing issues related to climate in 2018, and I think that from the ability to go out and talk about this stuff, the CDP benchmark rated us an A+ company in terms of climate. So there are a lot of benefits, especially in the emerging environment where this is, again, no longer a voluntary issue. Both regulators care about this, and I don't think I've stressed this enough, but investors care about this, right? The questions as a publicly traded company that come in around these issues are increasing, and the board has to be accountable at shareholder meetings to these questions. And so that can have a significant business impact if you don't have any good answers.
So that's a terrific response, Jesse. And let me push you a little bit on this question, and then I'd like to turn it over to Ivan. So yes, the board needs to answer to its investors. There's an expectation that Hewlett Packard has a response, has a vision on how it views these issues. But in terms of pushing the commercial benefit piece, has that been quantified? Right, so we're looking at the risk part. What happens when you lose a supplier? Okay, it takes time. You'll have to find an alternative source. So obviously that's the risk dimension. But has any analysis done in terms of, well, actually a more stable supply chain, a more ethical supply chain leads to whatever that is, X, Y, and Z, leads to more stable price, it leads to more less capital that you need to have in terms of, potential impacts on your operational risk, less legal risk in terms of being sued or whatever they may be. So has any work been done in terms of quantifying that commercial benefit?
So, I mean, it's a great question. I think it's a super complicated question. I don't have the numbers on hand. What I would say is this, though, is the ability of the company to, let me put it this way, pretty much all I do every day is what you're talking about, right? So you have to be able to siphon these different issues. So and some of it is in the negative. We can look at, for example, companies that don't have a strong modern slavery statement, right? What does that look like, for UK regulators, for Australian regulators, for California regulators in the places where modern slavery is required? For conflict minerals, when you get into disclosure in Europe and the United States, what is happening for companies that are not appropriately disclosing? I assume that there's some data out there. I don't have it on hand, but I can certainly say that, it has been good for us in terms of our publicity, in terms of our ability to talk about it. If you read our Living Progress report, it's a very, highly cited report that goes beyond just glossy sustainability, but it has an entire data summary section to back it up. And again, I think the way we would quantify it, at least, or I should say because again, I'm just from the ethics and compliance department, is the amount of times we've been recognized. If you Google HPE Living Progress awards, you're just going to see a page of, between climate and human rights and diversity and inclusion, LGBTQ plus rights, all of these different things that are important to investors as a publicly traded company. And now we're seeing that converge with the regulators who are now saying it's not an option. I think my argument would be it's put us in an incredibly good and strong business position to be compliant, to tout that compliance, to continue to be leaders in the area, which, as far as we can tell, the market has been demanding for quite a long time, starting really with, 10 years ago, private equity companies really demanding that any company they acquire have certain minimal management systems in place to deal with these supply chain issues. But I think it's a great question, and if those numbers are out there, I think that's worthwhile to further investigate.
No, that's great. Really appreciate your openness on this, and I'd like to turn same question to Ivan and then Ben in the end as well. So, Ivan, from your perspective, again, how do you view these issues in terms of risk versus commercial opportunities? And I believe you may have a slide on this question. So, please, over to you. Anything to reflect on this point?
Yes, Cem. I would like just to speak about, first thing which I would like to say here, if we're talking about due diligence and what we would like to see like a next step, I would like to split for two pillars. First of all, profit. Yeah? And the second one is things which will support the profit. And if we will speak about monitor and due diligence, what we need to put focus in, I would like to say that we need to think about people and health. But health can be not only for the people, it can be the health of the company. And if we're talking about health of the company, we should think about how we will measure and how we will make a deep analysis of the taxes, for example, which the company are paying. What about the labor tax, which the company sometimes try to hide? And if we are talking about CIS and Russia, which I am responsible for in my previous experience in Schneider Electric, it is really sometimes can be the challenging zone. What else? We need to think about really stable and resilient supply chain. What is for us? I'd like to mention that we are using some system for the suppliers to check the suppliers, and the previous year showed us that we need to change our metrics and the way how we are doing it, because we currently are using remote and video control investigation for the supply chain, for the technical and for the quality health of the suppliers. And it's I would like to help our organization to be more stable as well, and to really develop and establish the relationship or partnership relations with the vendors and suppliers, which is supporting us for the sustainable supply chain business. What is, for my opinion, is important also to be focused with the strategy, and do not forget that the sourcing strategy is important. You should really try to have not only one supplier, for example. It will this kind of monopoly on the supply market. It will be put the company on the very difficult situation. That is why the procurement should work in the really war mode, just to find this sourcing everywhere in the globe. And for me, all these matters are really important when you are making this kind of assumptions and due diligence, how you will be sustainable and how you will find the solutions to work with the suppliers and which will support you on your supply chain.
Thank you, Ivan. And I'm conscious that we have it's a great conversation. And again, I encourage you all to all the attendees to submit our questions. I'm trying to incorporate them during the discussion here. And I guess and it's been mentioned implicitly, but let me talk about it explicitly. So the importance of data and metrics, of course. I note, Ben, there's a potential stream of work here for the OECD, maybe to really look at this question about, in the industry out there, what metrics are being supported to bring the question about, how to look at supply chain risk and due diligence processes, not just for managing a risk and stability, but actually some of the potential commercial opportunities that it has. And I guess I wanted to get a few of your thoughts on that question, whether that's something that's been discussed at the OECD as a potential research topic or an area to be explored, and if not, that's okay too. And then I'll also turn to the last question to get you kicking off on this question regarding the convergence between due diligence and sustainability, specifically ESG, environmental, social, and governance, and link to that whether we should in fact move from a voluntary reporting framework to a mandatory framework, and whether or not OECD has a view on that. So I know that was a lot to unpack, but first let's reflect on what Ben and Ivan, Jesse and Ivan just talked about, and then if we can move to the metrics part of it. Over to you.
Sure, yeah, and especially what Ivan was just saying about building in more elasticity and flexibility in supply chains. I mean, that question is really of utmost interest to us. As I alluded to in my opening remarks, as a result of the pandemic, in light of it, I mean, we've heard a lot of calls to onshore supply chains, entire segments of supply chains, in order to safeguard the availability of critical inputs. And, of course, governments have that as part of an industrial policy toolbox, of course. But, I don't think in the absolute that's really an answer to some of the problems, some of the disruptions we've seen. We've seen historic problems across the 20th century with autarkic economies and so-called self-reliant supply chains, whereas in reality, I think, as Ivan suggested, a greater diversity of suppliers, not putting all your eggs in one basket, that's really a strength. And in that sense, I think that's really where supply chain due diligence comes in, because while there's some misperceptions out there that the OECD instruments on responsible business conduct and supply chain due diligence are obstacles to sourcing from high-risk suppliers, it's actually the opposite. We consider them tools to responsibly engage with the full range of possible suppliers. So from countries or regions that companies may consider high risk, from informal producers, from marginal producers, from small-scale producers. And I think particularly when you look at critical minerals, I'm thinking of minerals that are key to the low-carbon transition. Cobalt comes to mind, copper comes to mind, nickel, rare earths, others. We've seen, especially because of Democratic Republic of Congo's abundance of mineral wealth and the role of artisanal mining there, we've actually, while there's been some stigmatization of artisanal mining, we've actually seen the ways in the past few years in particular that artisanal and small-scale mining, or ASM, can actually assist with facilitating greater resilience. And that's because they're a swing producer. So when prices are high, they quickly get into gear and switch, can switch on. And likewise, when prices are low, production drops precipitously, as opposed to large-scale mining, which takes years and years of investment. And they also, of course, they represent a really broad cross-section of potential producers. So that may add in some redundance to the supply chain. But of course, with high-risk areas, with some of the risks that have been associated with artisanal and small-scale mining, child labor, corruption, although that's also present in large-scale mining, occupational health and safety, these risks have kind of come to the fore in the last few years. But as Jesse suggested, the point is not to cut and run. The point is to responsibly engage. The consequences of blanket exclusions, or what we sometimes call de-risking, that really can have some extreme unintended consequences that may be worse than the initial problem. So we encourage companies to stay engaged, and we see due diligence as really a tool for doing so responsibly. And then just back to the question on metrics, I mean, I think as our work has highlighted, and some of the polling highlighted, or at least our discussion of it, is that, there are data gaps, and that's partly driven by the fact that we do rely generally on company disclosures, which sometimes are not very detailed. And of course, ratings agencies play a role, although the data there is not always balanced in terms of the types of companies that are covered or the types of risks that are covered and how they're being addressed. I think the role that we can play is signaling where those gaps are, is communicating a strategy and trying to coordinate independent researchers to try to fill those gaps, and also interpreting the data. So we have an active work stream on that, as you mentioned, across our different sectors. So in minerals, agriculture, garments, and finance, which intrinsically is also somewhat cross-sectoral. And then, in terms of convergence, I think, as Jesse suggested, all the sort of stars right now are aligned in terms of these different levers coming into action, whether it's regulation or it's commodity exchange requirements or simply industry peers. There are leaders that are sort of raising the bar. We don't really take a position. We're not prescriptive on mandatory versus voluntary requirements, but what we do advocate for is for them to be harmonized and based on global benchmarks for what the global standard is. And of course, it sounds like I'm hawking our guidances, but I'll go ahead and do that. I think that whatever the answer is, it needs to be modeled on sort of a shared set of expectations, and I think RBC instruments play that role.
That's terrific. And just to reflect on what you said, and just to support what you just said, we just partnered with Thomson Reuters Foundation and a number of other investor associations on mapping the ESG factors, especially the S factors, the social factors, which overlap with due diligence topics like human rights, labor rights. And what we found is that there is a huge gap in terms of not only what's being voluntarily reported, but many of those reporting metrics is more about policies and procedures versus monitoring actual outcomes. And so there's a piece. So we're going to publish together with Thomson Reuters Foundation and a number of other organizations a report on this exact topic in the next couple of weeks. So that's just to underscore that there's a lot more there for us to do in terms of existing metrics and where we are today and where we need to be. But just,
we'd like to stay in touch on that, Che.
Yeah, absolutely. No, it's a seminal report, in fact, because many people understand the environmental piece. Some people have an idea what the governance piece. No one has any clue what the S actually means, what the metrics are. So that was the intent of the project, actually to map. And again, mapping according to the UN development goals as well. So I'm happy to pick that up with you separately.
Che, can I just jump in real quick? If I can just say real quick on the previous question, one, I want to just echo on the harmonization piece. I think that is incredibly important to highlight because from a resource perspective, again, we have a lot of resources at Hewlett Packard Enterprise, and seeing some variation in things like reporting periods or standards makes it really difficult for us to focus on the work itself as opposed to the administrative process. That's one. Two, on the metrics, I think your point on the S is important because I didn't want to say it without having the number, but we have quantified that engagements on sustainability have driven $585 million in net revenue, which was in 2019, an increase of 88% over 2018, and I think 2020 will show similarly. And I would just ask folks to go to our Living Progress report. That's on page 6. And the data summary has a bunch of the metrics. In addition to that question, it really has helped us gain access to markets, specifically in tenders. There's often questions that we have to mark down. And if we can't mark that we're compliant with those standards, we can't move on to the next phase of the tender. So for sure, that is quantifiable. In addition, something that we haven't talked about is retention of talent. There's standards that, in order to retain talent, I think ESG also, that's kind of separate from the supply chain, but your ability to manage the supply chain and have folks in the room who understand the complexities is somewhat reliant as well on what kind of policies you have in place.
That's great, and I wish we had another half hour, because there's a lot there for us to explore. But conscious of time, and so we'll start to conclude this webinar. But there's certainly a lot there that we can continue discussing regarding the impact of de-risking, which we know is an issue. The point made by Ben that it's not just about removing yourself from suppliers or a particular region, but engaging. There was a question that unfortunately did not have a chance to pose to all of you from the audience, but what is about the supply chain traceability, right? So, what's your ability or framework to kind of monitor the suppliers or your suppliers? How far do you go? And maybe we'll pick that up at some other point. We talked about the impact of credit rating agencies, which I would have loved to discuss further in terms of what input that credit rating agencies have in terms of monitoring, assessing companies' due diligence processes as part of the credit rating itself, which obviously has a huge impact on the cost of capital, cost of funding, cost of borrowing, and that's another avenue that I think we should explore as well. But this. Conscious of time, let me conclude with that. Please join me in thanking all of our panelists, Ivan Mikheev, Ben Katz, and Jesse Glickstein. There will be an opportunity to review and to see this video at a later date if you're unable to join us. But let me conclude with that, hand it over to Elena for last-minute administrative items. And again, let me thank you all very much for taking the time to join us today.
Thank you very much, Chair. Thank you very much, all the speakers. It was a really very interesting discussion. The good thing is that the majority of attendees stayed till the end of the panel discussion, so it's a very good sign. Thank you very much. You will see a pop-up survey. If it's not too much trouble, please submit your answers. And if you have any questions, please don't hesitate to contact us. Thank you very much. We stop here at this moment. Thank you.